Good evening, all. Thank you for joining us today on our webinar, Level Up with ithought.PMS. Today, we have with us Mr. Shyam Shekhar, the ideator and founder of ithought, and Mr. Ganesh, AVP of PMS. I invite Shyam sir to open the presentation.
Welcome to this presentation on the topic Level Up with ithoughtPMS. The PMS was once seen as a product only for very select investors. Today, it has become a very accessible, investor-friendly, and flexible product which solves the long-term needs of the investor. So, from being a very elitist product which only was used by people to park their surplus money. Today, the PMS has become a product which serves real needs like retirement purpose, like your saving for your future goals, building wealth for yourself. And it has become very, very accessible and very, very efficient. The choice of the PMS over mutual funds is now becoming increasingly common among investors once they cross a certain threshold of wealth. So people want a better experience and they are looking at the PMS as an option. And it is very much an option for most of you. And that's why we are here this afternoon to discuss about how you can level up with ithoughtPMS and what you can find in our work. So let's go straight into the presentation. And first, let's see what the opportunity really looks like. There are three parts to this presentation. There will be the big picture on India. Then the second part, we will talk about how we can level up with ithoughtPMS, and the third part will be Q&A. Let's go straight into the big picture. How does India look like as an opportunity? Few countries have the kind of positioning which India has today. First, we are a young democracy. We have reasonably good demographic advantage. We are a resource-rich country. Our infrastructure investments done over the past 2 decades are now ready to deliver for extended periods of time. Our financial system has been cleaned up over the last 5 to 7 years and is today ready to finance growth at a rate which will help us. And overall, it looks like we are one of the oases of economic growth among both developed and developing nations. So from a growth standpoint, India is in a very unique place at a unique time when other countries don't have growth. India seems to have reasonable growth. And we also have an opportunity to actually accelerate this reasonable growth over a period of time. So let's look at this growth from a GDP perspective. In 2001-2, India's GDP was 38 lakh crores. In 21-22, it was 2,36,000 crores, which is multifold higher over 20 years. So just imagine what it would be a decade later. So the kind of growth that we will add now can really create far more wealth over the next 10 years than the wealth that was created in the previous 10 years. Remember that in the last 10 years, we had 4 to 5 years of very, very ordinary economic performance between 2016 and 2022. So let's see how the corporate growth played out in the last decade to get an idea or a sense of what the next decade can be. If you look at the corporate growth over the last decade, I like the slide again, please. If you look at the corporate growth over the last decade, the net sales in FY12 was 44.42 lakh crores, and over a decade, it has become 107.14 lakh crores. So if you look at the 10-year CAGR, it was 9%. So it's not exactly at the higher end of the range in terms of corporate growth. But even with this growth, let's look at how the profits played out. That's very, very interesting to see. And the profits for this decade were very, very positive given the growth. If you look at FY12, the net PAT of the NSE 500 was 3.67 lakh crore, whereas in FY22 it was 10.22 lakh crore. So overall, if you see the profit growth of companies that made profits, it was 11.17. There were companies which made losses, so the growth in profits came down marginally. So if you look at GDP, if you look at growth, and if you look at profit growth, broadly, we are just above the double-digit range, but which is still comfortable. And the good news is that we are primed up for a slightly better trajectory right now. So there's more to this picture than meets the eye. So let's look at the next slide. So here is the big picture. Always stock price follows earnings in the long term. So if you look at what happened over 21 years, the Nifty's earnings grew 12%, but the value grew 14%. So assuming that we have a similar growth rate in the Nifty earnings over the next decade or over the rest of the years of this decade, it's quite likely that the Nifty's earnings could reward handsomely to investors. So we will see the markets climb this wall of pessimism that we currently are faced with. And you will see markets in a much better place when they do climb that wall of pessimism. Let's see the next slide. Now, what is our perspective? So that brings us to a very interesting place where we are going to give you our perspective on the global macros, the domestic macros, the global market, and the domestic market. If you look at the global macros first, the global economy is in a slow growth phase. Inflation is rising and sticky. The West is still nowhere near controlling it. Interest rates are seeing the policy harden and rates are tightening. The geopolitical risks are high given Russia and various other things. But our domestic macros show the economy in a moderating phase of growth. Inflation is sticky though, but interest rate is seeing policy tightening, so rates are going up and will probably go up for some more time, maybe for the better part of the next calendar year. The global equity market is highly volatile. This applies to both the domestic and both the developed and the emerging markets due to elevated concerns over geopolitical risks and volatile commodity prices. This could only increase the inflation further, and that's a genuine fear in the global market. The domestic market is seeing strength in corporate balance sheets. Corporate growth is strong, and it's aided by the rise in the prices and also low volume growth. Despite that, corporate results are good. Operating profit has been good. Valuations are mixed. We have pockets of higher and lower valuations in this market. So you can't really form one judgment for the whole market. So what's the risk to the economy? The risk to the economy is that we are seeing an elongated global risk of trade. We are seeing slower economic recovery in our country. It is slowing, definitely. And we are seeing inflation, which is higher and persistent. So we don't know when this inflation will come under control. So the ithought perspective is that global looks a little bit tough. Domestic looks relatively better than global. That's our perspective. So let's see the next slide. Having said that, we still believe that there are reasons to be optimistic, right? And actually, this is despite what I'm going to just tell you. Out of the BSE 500, 30 companies are down 50% from their 52-week highs. So the valuations are moderating. And 112 companies are still down between 30 and 50% from their 52-week highs. So stock prices are still falling, right? In a falling market, should you be optimistic? That's the question. But out of the 447 company results announced so far, 196 have reported more than 10% operating growth in profit. So that explains the reason for optimism. On the one side, stock prices are moderating. On the other side, we are seeing operating profits improving, which means that if this trend continues, where prices moderate in stocks, but profits grow, then they come into a far more attractive zone than they have been in recent times. So we have reasons to be optimistic and can spot good ideas in the medium term among growth companies that trade at reasonable valuation. So finding ideas is not a problem, and that gives us reason to be optimistic. So if you are starting now, you will still be able to find a supply of ideas over an extended period of time, and we are confident about that. So let's go to the next slide. So how can we translate this optimism and level up with ithoughtPMS? How is ithoughtPMS rightly positioned to help you do that? That's what I'm going to explain to you. And joining me in course of this explanation would be Ganesh. So let's just go into level up with ithoughtPMS. How can we do it? Let's go to the next slide. Firstly, our investment philosophy has been devised keeping you in mind. So what we think is the right thing to do is built on what is good for you. And the aspects that we have put into this philosophy are keeping the investor in mind. So it's not about what I think for myself as an investor and expect you to follow whatever I think, but it's about you. So that is how the ithought philosophy itself differentiates itself from what you see in the PMS market. In the PMS market, it's all about the fund manager, their personality, their egos, and what they think they can do. Whereas here, it's all about the investor, and we have devised the entire thing keeping the investor in mind. Firstly, we have brought only long-term focus in everything we do. We don't try to do any trades. Our investment choices are all done keeping the long-term focus in mind. By doing that, we don't get distracted by near-term trends, and we buy only what we can hold over reasonably long periods of time. Second aspect is that we don't buy what everyone buys. So our investing is mostly non-consensus. We pick up something when others don't want to buy. For example, we bought industrials when nobody was willing to buy them. And when everybody came in to buy them, when consensus happened, we were able to make the returns on those investments. So it's generally non-consensus oriented investing. So on the one side, you have long-term focus. On the other side, you have strictly non-consensus oriented investing. The next aspect is very, very critical in that we don't look at the index or the broader market, but focus on companies. So our entire investment approach is bottom up, and we find our ideas by focusing intensely on companies and doing a research in companies to come up with those ideas, even when the market is struggling for ideas. Over this weekend, I'm actually sitting on 3 decisions for the product, and I'll have to give a verdict on Monday. So that's the kind of thing. So the market may be at an all-time high, but we have to make up our mind on how we want to use bottom-up investing to give our investors better choices, better opportunities, and better outcomes. So that explains how the non-consensus investing is made to work for you. The bottom-up approach is very, very critical. While it's all nice to say that we buy and hold and you'll get the returns, you still need to have a very high focus on risk management. You can't just dump the money into a portfolio and hope that the investor will win. You need to continuously assess the risks for the investor in the market. So there's market risk, there is company level risk, and you need to balance these and devise a risk management strategy which always keeps the investor safe. So the investor must have the confidence in you when you ask them for money and be willing to give you money whenever you ask them, so that your risk management approach is given a fair opportunity to deliver superior returns. If the investor does nothing, then your risk management also is not getting the opportunity to do something. right? So participation is very, very important. And through a higher focus on risk management, we ensure the investor gets the comfort to participate. Lastly, we don't do any speculation, no F&O, no option trading, no IPO, nothing. So we don't like to buy companies which have high borrowings either. So we actually buy very simple companies and hold them for very long periods of time. So this really helps the portfolio during bad times. It loses less. And during good times, your portfolio does better than the market because the market first prefers the kind of stocks you're owning before it goes and buys riskier stocks. It's only when the market buys very risky parts, very risky stocks, and takes all sorts of risks to make better returns, your portfolio will briefly underperform the market. But again, that should not bother us because you should focus on what you want to do and on your philosophy to deliver your expected returns. So that's broadly the investment philosophy and how it works for you. Let's go on. That brings us to the investment universe. So we have 4 products in the universe. We have Solitaire, which is a multi-cap strategy, which is a flexi-cap approach with superior risk-adjusted return optimization. What do I mean by this? I'll explain. Basically, we take lower risk than our benchmark index. So if the benchmark is very aggressive, I am taking only 75% of that risk. And despite that, we try and deliver better returns for our investors. So your risk is lesser, but returns actually ends up being better. The second fund is a blue chip oriented fund called Coin, which has very high quality large cap companies, all the best names in the country, the large companies which you really respect. And this product has a very high scalability. The third product is Vriddhi, a small cap strategy with a private equity style due diligence. So we buy small companies but do thorough research. Our homework is very well done and we are fully prepared by the time we make up our minds to invest. And this strategy again has been very, very successful in generating returns when markets are favorable, and it actually gives you opportunity to buy when markets are unfavorable. So you can always play these cycles nicely using Vriddhi to get a superior investment experience. A last product in this list is Sphere, a multi-asset strategy, dynamic, with a very strong macro focus. That is Sphere for you. We have equity, we have ETF, we have mutual funds, we have debt funds, we have gold, and we also have global ETFs. So we have everything in one place, and that's the uniqueness. And using all these, we created a blended portfolio which is dynamic and which gives the investor a vastly superior experience over any other mutual fund product or insurance product. So in that sense, we are actually balancing the risk so well in this product that it gives the investor enormous comfort and helps him to scale up his investments in a dynamic strategy, which is multi-asset, thereby nothing to worry about which sector will do well or which space will do well. So that is the advantage of Sphere. So these are the 4 products that we have, and you can always learn more about our products to make up your mind as to what suits you. Now I'll let Ganesh talk to you about our investment framework, which we liken to an open kitchen because we have 4 products. And it's always difficult to think which one and how each product is run, what is the process similarity, how we bring that extra into your investment outcome. So over to you, Ganesh.
Thank you, sir. Good evening, everyone. Thank you for joining us today. And like Shamsa was saying, see, any philosophy, any investment philosophy needs to have a framework with which it needs to work. You put your philosophy on paper, but you need a direction through which the philosophy needs to run. So what I'm going to be explaining in the next few slides is our open kitchen. We can go to the next slide. How does our open kitchen operate? it is a threefold. The process is threefold. We begin with idea generation, we move on to idea maintenance, and then we go on to execution of the idea. So this is where our magic happens, right? What is your portfolio going to have? It's a product of all these inputs put together in the right proportions. If I'm going to be spending a lot of time in either one of these and more than the other, I'm not going to give you an optimized product. So I need to understand my investors' requirements and allocate my resources according to each process so that the idea, the output is validated and it is optimized according to the requirements of each investor. So this is where our magic happens. Over to the next slide. So before we get into the micro aspect of the idea generation and maintenance, I would want to give you all an overall view of what we look for in companies or ideas that you have in your portfolio. See, any company or any idea, I need to understand that they come with a strong leadership team. So any company, anything you put on paper, you can put it on an Excel sheet and say that the growth metrics are strong. You can say that the company is going to do this number, that number, but unless you have a solid leadership team or a management on the back end, which has a track record of executing this idea into a bigger idea, you wouldn't be able to do it perfectly, because numbers can be put out on paper, but then what is more important is the qualitative nature of this aspect. And when I do that, I go into selecting only the industry leaders. See, any industry that I look at, let us look at an auto industry or an IT industry, and there are other sub-industries within those bigger industries which also have industry leaders. So I would be getting into those niche companies which are also industry leaders who have stood the test of times. So what happens with industry leadership is you get a company which is actually looked at multiple cycles in their respective industry. So they know how to operate, they know how to allocate their capital during a specific downturn in a cycle, and they know how to tide over these cycle downturns, which is why I stick to industry leaders only, irrespective of which my product, I mean, whether it is Solitaire or Coin or NIFTY or Sphere, I stick with industry leaders in a respective industry to make sure I curate a portfolio of solid companies. And when I say industry leaders, I need to believe that they need to, or I need to believe that the respective industry needs to grow sustainably in the long term. So I build my positions in companies where there are a lot of good or high growth metrics in the next few years. When I do that, I'm not going to be sticking with ideas which have already fired and which are already glamorous in today's market. I'm going to be looking at industries which are relatively underpenetrated today, where the market isn't looking at right now. So what I do is I get into those companies, stay put, and generate the growth from my initial buying position and get out once the valuations become unattractive. So, and again, which the next point which we have come to is the corporate governance and financial discipline. As we had initially also specified that, we get into those companies which are good on the leverage segment. That is, if we are going to get into a company which has low leverage, what we are ensuring is that these companies will have sufficient cash flows to pay out dividends and also sufficient cash flows to grow internally as well without depending on external borrowings, which is what the next point also suggests: zero or low leverage. Once I tick off all these meters, right? Once I tick off all these requirements, what I end up with is the last one, which is valuation. So I can still be buying the best company, the best growing company in India, but if I don't buy it for you at the right price, you're not going to be making returns on my portfolio, on your portfolio, primarily because only if I don't buy them at the right valuations. So once I tick off the other 5 aspects of what I look for in companies, I need to tick off the last one, which is a reasonable valuation. Once I tick it off, this is where my idea generation happens. Now we have looked at the macro side of it. If we move on to the next slide, let's go into how an idea is generated from the micro perspective. So if you look at the idea generation part, see, all these are the raw materials that any research analyst would be using to generate an idea for your portfolio. They would be going through exchange filings, the annual reports of companies, the con calls, the management meeting transcripts, the reports from the sell side, and other peer networking reports that they would generate, and they would attend AGMs also. See, all these raw materials put together is what will give you your idea. So typically what happens is the research analyst looks at a specific idea, he prepares his investment thesis, which will take around 1 to 2 months. This thesis is then presented to the head of research and the fund manager, and on the approval only the stock enters the stock universe. But that doesn't end there. Once the idea is ready for execution, right? Once the idea is ready and is valued at the right pricing, at that point of time only we buy that specific stock for your portfolio. This means that depending on your date of entry, your portfolios could be vastly different. We were talking about the customization of portfolios, right? So let's say you get into one of our PMS portfolios today, your portfolio might be vastly different from a portfolio which of a client who entered with us 3 months or even 4 months back or even 1 year back. That will be completely different because the context of the market has changed within that time frame. So what we are going to be giving you is a customized solution and not any other model portfolio approach, which is going to just take a carbon copy of the overall portfolio. So my idea generation is going to be specific to each client, and my idea generation is going to be curated in according to the entry point of each client. We can go to the next slide. Once I generate this idea, what I need to do is maintain this idea. So when I say that my research team is working 24/7 into 365 days, it is to maintain this idea and also to generate these ideas. So when I maintain these ideas, I need to make sure that any idea that I still have in my pipeline is where the fundamentals are at one position. I need to make sure that these are still intact, right? As long as I hold them in your portfolio. Just to give you an idea of how Solitaire's idea maintenance has looked for the last financial year is that we have analyzed over 4,000 exchange filings, and we have attended more than 100 con calls and attended more than 175 AGMs. See, that is the kind of intensity that our research team works with to arrive at this 300 plus companies which are under our tracker. So once this 300 companies, 300 plus companies comes under our tracker, what happens is there is a further filtration to come into our investment pipe. So there are multiple levels of filtration before a stock comes into your portfolio. There are multiple meetings done, there are multiple discussions done, there are multiple arguments done, after which your portfolio ends up with a specific stock. Let's go to the next slide. And once I generate and maintain the idea, it is important that I execute the idea right. As I said, the valuation point comes here. So when I want to execute it, I have the idea ready, I have my valuation ranges ready, but I need to make sure that I buy this stock or this idea at a specific valuation point if I'm going to be making good returns for all my investors, because investors are going to come at different points of time. You all are going to come to us at different points of time. A person who joined us 1 year back should not get a different experience from a person who joins us today, which is why we make sure that the execution process is also flawless. What we do is we have a valuation range, we review the stock price, and there are two levels of positive and negative triggers which we have set. So we have a data analyst who also monitors these levels and lets us know when to buy and when to sell. So once the stock price hits the trigger, the message is immediately generated to the investment committee, and the decision on buying or selling is immediately made, and it is not taken in haste. It is taken with a lot of discussions, but we will need to hit the bullseye sharply because markets do not give a lot of time for our buying and selling. So our execution also has to be robust, which we have actually mastered in the last 3 years. We've been into the PMS, the whole PMS structure. Next slide, please. So now we've come to the value enhancement section. So what do you mean by value enhancement? So once you have once we have generated a portfolio for you, how would we add value to it? So we've spoken about the inputs. Now let us look at a specific aspect of what we have generated as an output to enhance your value. So Shamsa will be taking us through the same. And over to you, Shamsa. You can go to the next slide.
So when you decide to buy a stock, you still have to make sure that that stock brings out the right outcome for the investor. So I may like a stock, but if I buy it at any price, then it may not make a difference to you. You may also like the stock, by the way, but it has to make a difference to you. So here's a stock which everybody, loves to like. I mean, it's a favorite stock of most people. But look at it with a little bit of honesty. A lot of people own it, but most of the people have not beaten inflation during the ownership of this stock, right? They have not beaten the benchmark during the ownership of this stock. And this applies to even the most vocal proponents of this company. This is a very safe company, by the way. We're talking about ITC. But people have bought this stock before it fell. And they probably didn't buy enough of it when it fell. So here is how we started buying ITC at 235. We bought it all the way down. We continue to buy it in small increments because the valuation 2 years back and the valuation now will adjust, because 2 years back it was factoring in certain negatives related to both the business and the economy. But today it's actually factoring in positives on multiple business engines, right? So we have to assess these positives correctly, reset our growth expectations for the company, reset our earnings growth expectations, and accordingly buy. So you need to set a new level to buy, and we continue to buy this company. But we waited to buy it during 2020. We are still waiting to buy it today, so we don't rush and put all the money into the stock in one go. So patience essentially is a virtue, to buy a stock, to hold it for a long period of time, to scale it up, and even to sell it. So the question of selling has still not come because the valuations have not really gone to the level where we are uncomfortable, whereas we are still comfortable with the valuation. And if it comes down by a bit, we may actually see our comfort level with the company rise. That is the simple example that I have given to you, where in a well-discovered stock, your investment behavior can be value enhancing, right? It's very, very important to understand that. Let's go to the next slide. So how do we communicate our thought leadership to you? The fact that you are in this meeting itself is because of the way we have been communicating under various umbrellas. We communicate through Twitter. We got Milestone2Wealth, which is a platform which we are creating to engage with retail investors. We have our LinkedIn page, which has got a number of publications. All these documents shown here are published in our LinkedIn page. ithoughtPMS has a specific LinkedIn page in which you can go and read all these things. So these are all our publications which our colleagues have put together. Balaji has written, played a part in all three of these, and we have Rohit and Rajat also who participated in one of the publications. So through this, we communicate to the market about our conviction. I am also communicating to you both through WhatsApp and through Twitter quite consistently. I also do videos on YouTube very regularly in both English and Tamil. So what we think, how we bring thought leadership to our work is something which we work on constantly, and we are always there to give you clarity on our thought process. You will never be in doubt about whether we have conviction on something or not, and you will always know where our conviction is moving, because conviction is dynamic and it keeps moving in a particular direction, and you will always know where it's moving. So this is something we achieved through a multi-pronged communication strategy. Publications is one way, Twitter is another way, videos is another way, which is through YouTube. Then we also have regular monthly newsletters through which we share our thought process, and we also have a weekly market wrap through which we keep you updated. So through a multi-pronged communication approach, we have been keeping in touch with our investors, both existing and prospective, so that they always know what we think and they know what to expect from us. And they also know that we are well ahead of our peers, and we want them to know that we are ahead and how we are ahead. So this communication helps us establish this in the minds of the investor, and we are always focused about maintaining thought leadership in our work. So this is about how we created M2W, which is a platform for retail investors to start, scale, and dream big. Generally, investors feel handicapped by that lack of vision to become big. Everybody knows they must become big. They want to become big, but they don't know how. So that vision to become big has to be very precise in the early years of one's investing. So I realized that today, when I look back, which is the most critical phase of my investment career of 32 years, it was my journey from zero, which is the point at which I started, to 10 lakhs. By the time you go to 10 lakhs, you would have experienced so many hurdles, so much of adversity, and it's so difficult. Many people struggle even in that first leg. And then when you go from 10 lakhs to 100 lakhs, which is 1 crore, is again a very, very tough journey, right? It takes years of preparation, of savings, of investment, of monitoring, of self-improvement, of avoiding mistakes, then doing things right, all these things. What we have done in ithought is, though the PMS client comes in at 50 lakhs, we have created a system where we will guide every single investor from zero to start saving and growing his wealth and progress towards that level where he can choose way superior products that suit it. So from zero onwards, from the beginning, we are there here to guide investors. And we take all investors wherever they are. You may be at 20 lakhs, you may be at 40 lakhs, you may be at 50 lakhs, you may be at 5 lakhs, wherever you are, we will, through these two engines, create a winning combo where we will guide you to go to a threshold number from where your choices become many. So that is how these two combine. And I have created M2W with the clear idea that I want to guide 10,000 small investors to become big investors. So that is the mission. And we are going to do it through a very simple medium of mutual funds. People think investing in mutual funds is a walk in the park. It's very easy, but it's not, because mutual fund research in India is still primitive. And those who know research will not share it in the public domain because it creates a lot of controversy with the fund houses. And when you give adverse judgments, nobody likes it. So it is this knowledge that we are using for you, where we know exactly why a fund manager is not to be invested with, or why one should invest with a particular fund manager, and what we expect will be the winning funds composition, which fund is likely to do better than the others. So all this knowledge is being brought to play for you in M2W. And by the time you cross this threshold limit of 50 lakhs, you can make up your mind whether you want to continue in that or you want to go to ithoughtPMS. So we have a very seamless transition between one to other, and we handhold you from the day one, from the time you begin your journey with us till the time you are with us. So whatever transitions you make, we'll handhold you through everything. So that is how these two are a winning combo. Let's go to the next slide. Over to you, Ganesh. You can talk about this return setting metrics.
Thank you, sir. To the next slide, please. Okay, so this is a hawk-eye view on how the Nifty has performed over a period of 31 years. So what we tend to look at from this slide is very simple. Over a period of time, see, you might have entered the markets, you might have entered the index at year one on when you enter the index on year one, let's say 1992 or 93 or 2008 or 2009, your investment experience during the first year would be vastly different from what you've experienced over 30 years on a compounded basis. So if you look at the 30-year return data of Nifty, it is between 10 and 12%. So what we tend to tell our investors is the mindset of the markets have to be tuned in such a way that you need to look for returns in the long term, and your experience could be different depending on the time of entry of each investor. So you can, let's say you had entered the market in 95, you might have lost all hope in the markets, right? Because 95 you started and your portfolio went down by 23%, second year down by 13%, but at the end of 30 years, or even when you start making money in the range of 11-12% from the 12th year, your experience would be completely changed because you held on to your portfolio, which is just the index. So what we tend to tell you from this slide is set your expectations on those levels, and that is what the overall equity market is going to deliver over the long term. So we would like to take a quote from Mr. Bruce Lee as well. The long-term consistency trumps short-term intensity, because whatever you experience in the short term is not what is going to sustain for the longer term. So come with the proper long-term mindset. Over to the next slide. And this is our fund positioning with respect to our PMS. So what we have realized over a period of 12 years into our inception is not every investor is the same. Each investor is different from a risk appetite perspective, from their ambitions, from their own aspirational perspective. People are different. They want different things. But what can I do? What can I offer to make sure that I satisfy all my investors? So which is why we have productized the overall PMS universe into different products, so that each product addresses a specific goal and a specific aspiration. So let's say you have a very aggressive attitude, you can go for a small cap product called NIFTY, and a Solitaire, which will have a mix of both conservatism and a little bit of aggression on the small caps, which will have a very moderate approach. And other conservative investors who have an expectation who have a very conservative mindset when it comes to investing can go for coin or sphere. Next slide, please. And this is something that we have delivered since our inception of each of our funds. And this is for you to see. And what we expect in the future is going to be product driven and not the output driven. So we just want to show you what we have done since the inception of each product. So the fund performance of Solitaire and Coin for you all to go through. Let's give a minute before we move to the next slide. Okay, we can move on to the next slide. Okay, we can move on. Okay, so we would want to show you all where our strength lies. If you look at our whole firm, right, our research team is bigger than our sales team. So this is a desk which has actually started off with a research desk and then moved on to adding salespeople. So usually companies operate the opposite way. They put up a sales team and then find out if there are research members that they could add to the firm. But since inception, we have worked or operated in the reverse way. We started off with the research desk and then added sales team to substantiate or give the research an output that is substantial in terms of what we could give back to the community. Over to the next slide to give you a complete overview on how our team looks like. Next slide. So we have Mr. Shyam, who is the CIO and fund manager, and we have our Mr. Balaji GR, who is the head of research, and he's also the co-fund manager for one of our PMS products, Coin. And we have Mr. Rohit, Rajat, and Niranjan, who take care of the funds with their respective. So Rohit and Rajat take care of NIFTY, while Niranjan looks at Sphere from an overall perspective. And we have our other research analysts and strategists who work with them to ensure that you get your portfolio that you deserve. So what we see here is a very solid team which can give you the portfolio that you can sustainably grow for a significant period of time. So repeatedly what we have been discussing in the presentation is that we work for the longer term, right? Our roots are in research and strategy. So whatever we do, it's completely for the long term and it is completely sustainable over a period of time. Whether it is going to be N2W or ithoughtPMS, the vehicle is not going to matter. Whatever we do it with complete focus and complete and a complete understanding of what we are doing for our investors, and this is going to be sustainable. That is the key word. Our work across different divisions is, or something which is common between different divisions, is sustainability. A lot of our investors, a lot of families that we are servicing even today have been our long-term customers. So this is predominantly because of this solid team effort, which also translates into sustainable returns over a period of time. Next slide. And Mr. Shamshekhar, about Mr. Shamshekhar is how I thought was founded and his investment biography. We could take a minute over here and then move on to the next slide. Next slide, please. And it is, and the investment team who looks at your portfolio throughout the year and make sure that you get the portfolio that you deserve. And we have a solid team. Mr. Balaji, who has more than 16 years of experience in the public financial markets with Fidelity, he's been with Reliance Capital and IIFL Wealth as well. And Mr. Naranjan Sridhar, who's a certified FRM professional, and he has over 17 years of experience in the financial markets, and he's been with ithought almost since its inception. And we have Mr. Rohit and Mr. Rajat, who have a private equity background and have also worked with Mr. Rakesh Jhunjhunwala's private family office. So if you look at each one of our investment personnel, they have a celebrated background and they stick to what they do best. So that is what ithought, that is what makes ithought what it is today. Next slide, please. And we've come to the end of the session. Now we'll move on to question and answers. Please, yeah. So you can type in your questions in the Q&A box on the top. It would be next to the reactions button on top. Okay, the first question is from Mr. Ravichandran. PMS is only for mutual fund or for direct equity stock. So what we do is with respect to 3 of our funds, which is Solitaire, Coin and NIFTY, those are 100% equity. Sphere has an allocation to mutual funds, direct equity, we buy into ETFs, we buy into gold, we buy into silver. So it will be a multi-asset approach. I hope that answers your question, Mr. Rajchandra. Thank you. What is the payment term condition to join PMS? So if you're looking for the minimum investment requirement, sir, it is rupees 50 lakhs as per SEBI regulations. Okay, we have the next question from Mr. Ravichandran again. How much we want to pay ithought PMS for joining? So each product has a different fee structure, sir. So your respective advisor will get in touch with you with a product note, which will give you a detailed explanation of how the fee works for each product. As far as the minimum investment goes, like I had mentioned, it is rupees 50 lakhs as per SEBI regulations. Okay, next question is from Mr. Narayanan. What would be the delta in terms of returns, say 5 years, that one could expect between ithought PMS and ithought MF strategy? Let's assume model strategy for both. Shyam sir, would you like to take this question? I'll repeat the question, sir. What would be the delta in terms of returns, say 5 years, that one could expect between ithought PMS versus ithought MF strategy? Let's assume moderate strategy in both.
Sorry, the needs are very, very different for a PMS investor and a mutual fund investor. First point. Second point is that mutual funds are basically products in which the risks are far more well spread out. So when you have a well spread out a normalized risk approach, your returns may be a little bit softer than the PMS, but it may possibly be 1.5% lower, not very, very vastly different. But if you are a very active and aggressive investor in a PMS and you keep giving money every month, then what will happen is your investments in the PMS will actually start diverging from the mutual fund performance. They will do better basically because your participation will ensure that you start doing way better than what your mutual fund experience would be. So it all depends on the investor. It depends upon what you are comfortable with, and when you are comfortable with that, then you will be able to do better. That is my reading.
Thank you, sir. I think we have a few questions from the chat box also.
Yeah, I'm seeing some questions.
Yes, sir.
How long will you deploy the money in the concerned PMS? It depends on the opportunity. Today in Solitaire on day one, we are deploying 60%. In NIFTY, it is lower. In Sphere also, it is around a similar rate as Solitaire. So as markets give us the opportunity, we'll deploy. So we don't have any specific biases on that. PMS are allowed to invest in unlisted? No, I don't. We don't plan to invest in unlisted entities. Tell me how to join M2W. You can share your number, Dilip, and we will help you join M2W without any delay. One of our colleagues will talk to you, and they will make you join M2W without any further delay. So Kartika's question is, considering the fixed fees yearly, how is the performance achieved through real returns or from fee-based savings? No, it's through real returns. You have to achieve performance only by making better choices. That's the only way. What would be the delta in terms of return, say, over 5 years one could expect in the PMS? It depends upon the investor. It can vary a lot, but a very active investor will show significant delta. That's what I feel. If you're a very disciplined, active, regular investor in the PMS, your performance can be 2-3% higher than the MF strategy, because the MF has got too much of stock holding, so it will get normalized. Some set of stocks will do well, some won't do well. So that can depress the performance slightly. That between 1 and 2%, it will change. How transition from M2W to PMS happens? You will basically sell your M2W portfolio once it crosses 50 lakhs, and then you will put the money fresh in the PMS. So we don't move investments from M2W to PMS, we move only money. Suresh, I hope that answers your question. Financial planning is a separate subject. It's a separate team which does the work. It attracts a separate charge. Financial planning is done by specialists who are planners. So that will attract a separate charge. It has nothing to do with other services. Mutual funds are not managed by ithought. ithought selects mutual funds which are managed by asset management companies. How often will you churn the portfolio? Our earlier investors have a churn rate of only 25%. So it's actually a very low churn strategy. Already I'm holding, Ravichandran asked a question, already I'm holding portfolio of 50 lakhs. How can I transfer to ithoughtPMS? You have to sell your shares and transfer. We don't take scripts, we take only money. How different coin versus index investing? It's very, very different. Index investing is primitive. So you go and buy Adani, Ambani, everything. Coin doesn't buy all that. Coin buys only blue chips. Basically, coin is one of the most true to label blue chip products in the market. It's superior to every single blue chip product in the market, and it's a very disciplined product. And for the investor who invests regularly, coin is a superb product, and it is way superior to index investing. So we will give you recommendations in M2W as far as mutual fund is concerned, and you have to accept those recommendations, remit the money. That's how investments in M2W will happen. Is Sphere ideal for someone who wishes to invest on apps and is not willing for substantial incremental contribution? I think it's very important to contribute incrementally if you want to really improve your return. So not willing is generally not the right approach, basically, Siddharth. You have to invest consistently. That's how you basically improve your performance. So that's how you can actually participate in every emerging opportunity. Otherwise, you would have bought ideas over a particular time. 6 months, you would have bought all the stocks which are fancy, but subsequently, you will not participate in any of the new ideas, because you can't sell an idea just to buy another idea. So consistent incremental participation is very, very critical to get the best outlook for your portfolio, outcome for your portfolio. So Mr. Narayan is asking broad market outlook for 2023. See, you're getting into an election year in 2024, so market will reflect that. And also you are going to have interest rates rise higher globally. That will also affect to a great extent. That is what I will say. But it's a very good year to invest. Next 2 years are very good years to invest. That's my sense. And 52, which scheme is suitable for me? I think that you can pick between Solitaire and Sphere, or if you have money, you can buy both. That is my suggestion. Yeah, PMS does exceed the mutual fund return. That's what the data shows, and I can share the data with you, Rajesh. It does by a wide margin, and we try to create less and less capital gains tax because we don't trade much. That's the second point. ithought has got no control over shares picked up by the mutual fund manager, which is why we like to have our own PMS. What percentage is that? Between 10 and 20% every year of the corpus in 4-5 installments.
There's a question from Mr. Ravichandran, and I thought anybody having SEBI registered person. So ithought is a SEBI registered PMS provider. As per SEBI, we are one of the. If you look at our website, also you would be able to see our SEBI registration number for our PMS. So we are a SEBI registered PMS provider. If that is the question, I hope this answered your question, Mr.
Yeah, we are SEBI registered in every work we do. We are not like many others who give stock recommendations.
There's a question from Dr. Ganesan. Please suggest which one is the best PMS for aggressive investor. So if you look at the most aggressive product in our universe, it is Vriddhi, which is a small cap product. But if you are an aggressive investor, you can still show that aggression in a product like Solitaire by investing regularly. Because whenever there are opportunities in Solitaire, the phone will ring. I mean, we will call you up and then let you know of the opportunity. At that point of time, if your aggression aligns with our aggression at that point of time, then you still are going to be an aggressive investor who's investing in Solitaire.
How often will you churn the portfolio?
So the churn is going to be less because whatever we are doing, we are not going to. We are not into momentum trades. We are not into short-term trades. So we are into ideas which we can hold at least for a period of 2 to 3 years. So the churn is expected to be less than 20%. That is our average till now. If you look at our Solitaire portfolio, our average churn has been close to 20 to 22%. Our intention is to keep it in that range only. I hope that answers your question, sir.
So somebody is investing in Taiwan, Japan, Europe, NASDAQ, and through us. Is it okay to keep this diversification? We have to see the proportion of each and then understand whether it is okay. I can't make a comment based on what you have just told. So if you share your details, we'll have a look and tell you whether that diversification is rightly done and what our opinion is. We don't have any exposure to quant mutual fund company. Zero.
There's a question from Mr. Siddharth. Someone with 50 lakh capital, is M2W or PMS ideal? So like we had mentioned, it's not about where we operate or where we build your corpus. It's going to be whether it's ithoughtPMS or M2W. We're going to use the same philosophy across our verticals. But let's say you start a PMS, it is always important that you contribute regularly whenever the idea generation happens or whenever the opportunity becomes bigger. So if an investor has 50 lakhs and has a capacity to add 10 to 15% at least during a year in a span across 2 to 3 quarters, whenever we ask for money during opportunities, whenever we find opportunities, that would be ideal for an investor. If not, they can definitely start with an M2W and then transition to a PMS seamlessly.
So international stocks we don't buy directly. We buy the NASDAQ 100 ETF. That's what we buy in Sphere. But in Solitaire, there are no. In the other PMS product, there's no international stocks. What will be the strategy in small cap PMS in years like 2018? See, if you don't have ideas, you have to wait. It's as simple as that. By the way, what makes you think that this year is not what we are seeing now is not 2018? Could be very close to that. That's what I think. So you have to buy only where you have conviction. Contra, where you buy. So I have bought a small cap company in 2018, which is today 5 times larger. 5x gain in valuation. So it's possible to buy. I had bought and sold Acrisil, which was a 250 crore market cap company. I have sold it at something like some 2000 and something. 6 times, sorry, 300 means about 2000 crores we sold it for. So it's not that in every market there will be value. So it's not that everything is overvalued, Mr. Narayan. So some things can be very different. What's your input on VLRT framework? No comment. I have no opinion on that. What are the challenges you face to design a portfolio with MF as fund managers design? We don't have any challenge. We've done it for 12 years very successfully. We return 14-15% if the investor listens to us. We have done it very consistently. Unlike many people who have not been able to do it consistently, we have done a very, very consistent return generating performance in mutual funds. We just are ruthless with the mutual fund. If I think the fund manager is not good, we will not invest with them. We'll take the money out, or we'll never give it to them. So you have to be very ruthless in mutual fund investing. That's what we do, and it's difficult for us sometimes for the industry, but that's how we work. Because to us, the investor is the boss. In the end, we have to make him happy, and we have to take care of him. Yeah, how does M2W achieve 50 lakh monthly SIP? Regular one-time contribution of lump sum. We'll keep on doing this and the portfolio will grow. Like, I had this very interesting conversation with a driver in one of the companies in which I am associated. It's not my company, but I'm associated with that company. So he started investing. So I told him that you must, grow, build a book. So he has come to 6 lakhs now. The other day when he dropped me after a board meeting, I asked him, where are you? He said, I'm at 6 lakhs. I said, now you have to go to 10 lakhs. And from there, we have to go to 50 lakhs. So for every person, this is an aspiration. If you take my own self, I started with very little, nothing, literally, it's a few thousand. So for me, the first thing was go to 1 lakh, then go to 2.5 lakh, then 5 lakhs, then 10 lakhs, then 25 lakhs, then 50 lakhs, and then 100 lakhs, and thereafter. So this aspirational ladder has to be climbed by every investor. What will MTW do? We'll choose correctly. We'll not make you small cap, buy small cap when it's the wrong time. We'll be very correct in what we do for you so that you always make money and you add money comfortably and you grow your money. That's as simple as that. My view on gold, I'm bullish on gold. I continue to be positive on gold. MF, you can expect anything between 10 and 14%. That's the expectation, 10 to 14. Yes, you can start with a lump sum of 5 lakhs, Suresh, and then do monthly investment. Very much. You can do that. Absolutely. You can do the other way around also. As you wish. We'll be happy to help you in both ways. See, basically, I want to create a movement of investors who move from 0 to 50 lakhs and beyond. So I find mutual funds to be very convenient to do that. It's very good, very efficient, and we will be able to avoid mistakes. We'll be able to do it in a very disciplined way. You're right, Arun. That's the whole idea. So we want to do it in a disciplined way so that there is no slippage. You should not go up and then come down. You should be able to manage your growth concertedly, and you should be on a very positive mindset throughout the time. You cannot have sometimes you become so scared that you want to leave investing in equity. I don't want that to happen. So I'm trying to devise something which will be less pain with better outcomes. That's what M2W should be. And I want all my investors to have the best investment behavior. That is very important. Because if you have the best investment behavior in M2W at an early stage itself, this will be with you all your life, and we will be able to do wonders as we go forward.
There's one question from Siddharth again. So a typical question, as the NIFTY is at its peak, there is a fear to deploy fully in the markets. Is the question?
I've done multiple videos which are going to come out. So on this, deploy judiciously. This market also has very exciting opportunities. Yes, M2W invests only in MF, Dr. Ganeshan. So deploy judiciously and carefully, and be very cautious, and deploy over a period of time. So you'll be all right. That is what I think. I don't think NIFTY should be the one and only guide for everything. Siddharth, I hope I have answered your question. You should deploy gradually and with a lot of discipline. Yeah, we do 6 videos a week in Mudiretigalam. Thursday is an off day. So 6 videos a week you will continue to get. Please share the videos with all your friends who are keen investors or whom you want to become keen investors. And let's all see how we can help each other to become bigger investors with every passing year. No, not in one go, Rajesh. We today we'll invest 60% in Solitaire, less in with the more or less the same amount in Sphere. One go, no, and then gradually we'll invest the other parts. We don't do it in one go. That's how we are different from other PMS, other MFDs, because I want the money to be deployed when the opportunity is in your favor. I don't want to blindly put the money into markets. Yeah, thank you, Chandra, for your kind words. Definitely, we will continue to do what we do. Difference between PMS and MF. Ganesh.
Yes, sir. So a PMS as such gives you the flexibility. So as Shamsa was mentioning in one of the previous answers that he had given, the flexibility in a PMS is stock specific. In a mutual fund, it is a little bit, we don't have that kind of flexibility that we have with the PMS. That is the only difference. And we had also mentioned that over a period, since our existence, we have created a sustainable portfolio of mutual funds for a lot of our investors who've made returns over a considerable period of time. So whatever we are doing in PMS, albeit a little less flexible in the mutual fund side, we'll still be able to do it sustainably and successfully. Other than that, except for the way we work with each product, there is no such there is no difference in the way we approach a mutual fund versus the way we approach a specific stock idea. Only the work involved is a little different.
Okay. Thank you all, and I hope to see you all join us on this investment journey, both with M2W and with ithoughtPMS. You also are our ambassadors. Help your friends start saving using their tax ATC, using every possible approach, and they can join us on this journey. Yes, Rajesh, I will answer it. Just give me a minute. And we want you to do well, and we are definitely here to hold your hand and guide you every step of the way. And can we have a mix of two strategies? Part of 50 lakhs in aggressive product like core and satellite, you can do it in Sphere. Sphere has got both MF and equity. That's what Sphere is all about, Rajesh. I would ask you, I would definitely like you to consider Sphere as a product for that. You can do both. We are doing that. It's an exceptionally unique product. Thank you all, and we hope to see you again in one of the M2W webinars, which will shortly come up. Do watch all our videos, do share them with your friends, and be somebody who takes good things to others, and helping others also become successful investors. There's no greater service you can do to the people around you than helping them be careful with their money and to grow their money. Thank you very much. Thank you, Ganesh.
Thank you, sir. Thank you, everyone. Thank you for joining us today. And if you have any further questions on this webinar specifically, or anything on the PMS or the M2W products, you can reach out to your respective advisor, and they will be able to help you out. So no closing comments. Thank you.
Thank you everyone for joining us today. If you have any further questions, you can reach out to your advisor. They are your point of contact, or you can also contact us on our central number, and someone from our team will get in touch. Thank you so much.